What is up, YouTube? We're fucking back. We're fucking back. Holy shit, guys. I have spent all day trying to figure out what was wrong with my mic. And I finally did it. It's 3:40 in the fucking morning. And I don't care because I need to record a video. Otherwise, I am going insane. Okay? First, massive shout out to this guy right here. Because apparently there is this setting that I have never even touched installing this mic that was turned off, that needed to be turned on in order for the mic to work. I don't know how it was turned off or what happened, but it is fixed now. So I'm a happy man. Let's get straight into it, okay? Let's get straight into this shit because there's a lot of alpha I wanted to share. Now, as you guys have or may have not known or know, I have been talking about this range being a massive reaccumulation range, okay? And I've been calling for this range to be broken to the upside, okay? Expecting price to go higher from here, and then we'll see what happens once we tackle that range high. And I've seen a lot of posts about, price breaking all these, Bollinger Bands, EMAs, RSIs, you name it. And a lot of bearish posts about this range and people calling, oh, Bitcoin is under 60K. This is bad. Triple top. Everything has been throwing out there on my Twitter feed. And I just wanted to look at it now from a bit of a different perspective because I noticed something pretty significant that I wanted to share with you guys that kind of proves my point of the top not being in, okay? Doesn't particularly prove that this is the exact bottom, but it just proves that the top is not in. So, what I wanted to do is I actually wanted to look at the first top of the previous cycle, okay? Because we had that double top, as you can see right here. And just looking at the first top that created itself between Feb and May of 2021, we're just going to copy and paste the bars pattern, okay? And we're going to move it over to our right. Let me do that a bit better so I got that bit of an uptrend as well. There you go. There you go. And let's move that to here. There you go. So, what I have in front of me is the first top of the previous Bitcoin cycle. And as we can see, or as we can say, should I say, is that of course at macro tops and macro bottoms, there is market maker involvement. There is a distribution in some sort of way in order for big players in the market, aka market makers, to sell their positions. So at any major swing point on the higher time frame, there must be market maker involvement. Otherwise, they cannot cause such swing moves. Okay? So I think everyone can agree with me here that there was definitely market maker involvement here that was dumping price to the downside because, this was the local top and we got a 50 to 60% correction from there looking back at this dump. The dump in total was 55 to 56%. So we can definitely say there was some market maker involvement there that kind of pushed price down. Okay, remember those words. There was market maker involvement here that pushed price down 50%, 50 to 60%, if I have to be exact. What I'm going to do now is I'm actually going to invert my chart to look at this local range from an inverted perspective, okay? So I'm going to invert my chart and then therefore put this back to the normal distribution that we had right here. And look at the similarities. Okay? Let's look at the similarities. What we had right here, the 2021 top, the first top, is we had our initial range high, initial range low. First sweep of the range high, second sweep of the range high, breaking market structure back inside, putting in a lower high, confirming a Wyckoff Model 1 distribution, where this is the test or the LPSY, and we're dumping from there. Okay? Range high, first sweep, second sweep, lower high. Okay? Confirming a Wyckoff Model 1 distribution. If we apply this to the current range that we're in from an inverted perspective, what do we have? You have your range low, you have your range high. You have your first sweep of the range high, you have your second sweep of the range high. You break structure back inside, lower high. That's simply all we have. So comparing it to the 2021 distribution, what is expectational order flow for price to move down? Because as I said before, we can with 100% guarantee say that there was market maker involvement in this fractal, because it caused a 56% move down on Bitcoin, a major asset. So there was for sure market maker involvement. So what can we say right here? If it's looking almost the exact same, that also in here there is market maker involvement that can cause a 50% move down. But wait, we are inverted, meaning if I invert it back, look at the similarities. Look at it. Just look at it. The same way it caused that move down on the distribution in 2021, it can cause that move up now. Just look at this range. Let me move it over to here. Just look at this range, inverted with the current range that we're in. Look at that. One tap, two tap, three tap, higher, low, breaking structure. Higher you go. What will be around a 50% move? 50% move would actually bring you towards 90K. Which is very possible after such a long range that lasted almost or like over 100 days. But do you see what I'm getting at? We can confirm that in this range there was market maker involvement, and price is showing the exact same behavior just from a different perspective. But the same way tops are formed, the same way bottoms are formed. It's the exact same principle. The exact same way is just in reverse. Okay? But it's the exact same way. So that's why I'm so confident into this range breaking up. Okay? I know my Wyckoff, and it's giving me Wyckoff vibes. 100,000%. Now, let's zoom in into some more local price action and see, when we could actually start having that move up. So, putting this range on our chart perfectly and zooming in. Right here we have our taps. Price came down, swept major liquidity, which is valid for this Wyckoff Model 1 to have that LPSY or LPS. My apologies. And then I've been talking about, multiple factors. This swept major liquidity, which is very good for a Wyckoff model schematic to have, because that's how they market maker fills their positions. These are all sell orders, all stop losses that call sell orders. And that way he fills his buying orders. Now, as I've been saying, break that major structure from the top down, which is this lower high, lower low formation on the 4-hour time frame. If we just follow that, this was one straight shot down. As I've been saying, if you break this high, the all-time high is in play. The range high is in play. Because as I've also been indicating that, structure doesn't like to last so long. Meaning we have one break here. One break here, 2 break there, 3 break, 4 break, 5 break of structures in a row. From my expertise, I can say between 3 and 4 breaks is normally the max. It doesn't like to exceed that. After a while, price needs to range, grab more liquidity, and either reverse from that range or have a continuation in the form of a distribution in this case, because we're downtrending. But since, we have this bigger Wyckoff Model 1 schematic going on, I'm expecting a reversal. So, looking at it, this is the major high to break. I've been talking about that. Everyone knows by now. Then, dissecting the market structure between this leg and this leg, we can actually find a more local high that's also very important to break. Because looking at the market structure in this leg, we can confirm, as I've said before, that this 1 hour market structure high is key. Okay? You can see it as a domino effect. Once we start breaking this high, most likely this high is next. Now, what has price been doing so far? We actually rejected from the 1 hour order block that was protecting the high. Okay? We had a local Model 1 distribution in here that hit its target. And then we had a range deviation, came back inside, did not take out the high, and kind of had that move down from there. And I was looking, as you know, this is a pretty aggressive V-shaped recovery so far. Was there significant liquidity to be swept in here before potentially moving higher? So I was looking on the lower time frame, and what I found is that if I had to, if I stayed on the 30, and I was looking at this move up from a liquidity standpoint, what will be the most extreme liquidity point on this move up? Because we have this low here, but we have another low waiting lower. And this is not the extreme point because we have another low waiting lower. And just looking at it from a, pretty normal standpoint, I would have to say that this right here is our main liquidity point. It's kind of like on the 15, it's technically speaking the first 15-minute pull that we had. I know it's very low time frame, but we're staying technical here. It is the first 15-minute pull that you had. And we came back for it, and we grabbed that liquidity of that point. So I'm thinking this could potentially be the bottom, a pretty macro bottom for Bitcoin. Because I've seen a lot of posts talk about taking this low again. And even though that's 100% possible, I think it will be too easy. I think it will be too easy for Bitcoin to take that low, create a new range in here, and then, accumulate from there. It is 100% possible, but it would be too easy, in my opinion. And just because I see more and more people talking about taking that low again, as I said previously, the more people that watch it, the less good it becomes. So I'm just thinking that going up from here would fuck up most people. Literally. It will mess up most people. And from a liquidity standpoint, there is no reason to come lower. Literally, from a purely a liquidity standpoint, there is no reason to come lower, and there's every reason to come higher. Because guess what? Right here, locally speaking, you have liquidity, and this whole move is just pure liquidity. Like, as I said, once you start breaking past this supply zone, it's just a move up. It's the ugliest drawing I've ever done of an arrow, but quick move up. Okay? But just looking at this from a liquidity standpoint, this is pointing towards higher, okay? Because all sell side liquidity has been taken, and now price can move to the buy side liquidity, okay? So yeah, I'm getting excited, guys. I'm getting excited. And mind you, this is all targeted towards the range high. After tapping the range high, this Wyckoff has hit its technical target. Okay? I want you guys to know that. Once that range high step, it has hit its technical target. From there, it can do whatever. Can turn into a distribution, can turn into a bigger Wyckoff. Who knows? But as of now, this range, I'm pretty confident it's going to tackle that range high. Now, zooming in even more into what's happening over here, the first real signs of strength on this current down move would be breaking this 15-minute high, okay? simply just following structure from the top down. You have lower highs and lower lows, and this is also a lower high and a lower low. So breaking past that high is your real first chance into potentially having a full-on rotation back up, because right here we just have liquidity. There you go, just liquidity, and I don't see any significant supply zone. We do have a 10-minute supply zone backing that up. Okay, let's make that supply. We got some supply in here, but that upper one is way better, but we're just gonna put it on our chart. There you go. Just put it on our chart. Let's check the volume profile of this. And if I extend it, okay. Yeah. So far, we came down pretty aggressive, and then we immediately recovered the whole move down. You know, coming into potential swing long POIs, this is what you want to see. As I discussed in the previous video, you want to have these aggressive sell candles coming into a potential Wyckoff bottom, because, you know, that's how they fill their big long positions. They need those sellers in order to fill hundreds of millions of dollars worth of longs. Trust me, you don't even understand or can comprehend what these market makers trade with. They move markets. They move they move an asset that has a almost $1 trillion market cap. What's the market cap of Bitcoin? I don't even know. Let me double check. Because I'm actually pretty curious now. Market cap Bitcoin. Yeah. So the market capitalization of Bitcoin is 1.2 trillion now. So I'm talking about moving a $1.2 trillion asset with 40 to 50%. That takes hundreds of millions of dollars of longs. Okay? So that's the kind of money I am referring to when I'm talking about market makers. So, you know, we're entering the weekend. I'm not expecting that much to happen on a Saturday, but yeah, it would mess up a lot of people. Just Friday 10 p.m. put in the bottom and just blast up from there. I would absolutely love that. And oh boy, if that happens, I am spamming this vid everywhere. Just everywhere. Okay? But yeah, that's it for me on Bitcoin. I want to go over a real post-trading analysis video now. Okay? First, you know, I want to talk about this Wyckoff schematic, compare it to the previous top to show real proof of market maker indication and involvement, and return to zone, too many break-off structures back to back to back. We're grabbing all liquidity to the downside. All liquidity is above us now, so enough reason to come higher. Boom. Done. Big summary. Now, the first thing I want to go over for myself as well, because as you know, this post-trading analysis vid is literally just a trading journal for myself. And I actually wanted to go over a loss that I took on Euro USD. Okay? Let me take a sip of my water. I remember what the trade was. Let me go back to it. Let's set it up real quick. Okay. Take a sip of my water. Okay. So, regarding Euro, I actually took a loss that was very unexpected because the entry model has around a 92% win rate. And I've been discussing with my boys, you know, what could be the case, what could go wrong here, or why could it go wrong in this situation, to try and see if we can prevent it next time. Because if you can prevent it, of course you don't lose money. That's pretty obvious. But if it has a 92% win rate and you know exactly when the 8% loss is, you can turn it into a 100% win rate, right? So you always want to learn from your losses, and you should learn the most from your losses. But just to recap, we have a massive range, and we were hovering around that volume area low. Okay, kind of having that rounding up effect, but also the rounding off effect. So not that much to tell regarding euro on a macro scale. But zooming in, price actually fell to take out the daily low or the daily high. This was your daily high. We came up, created a 1 tap, 2 tap, 3 tap distribution, broke structure from there, and had a lower high for a lower low, and then we formed that range formation. Very clean range formation, pretty easy to follow. And now let's just focus on the range alone. So we had this range, and we had been trading in this range for almost 11 days. There you go. Around 11 days without taking the extreme point of the range. Meaning we had almost 2 weekly inside candles. So if I go on the weekly time frame, of course, now you took that low, but these candles prior to taking that low were 2 inside bar candles, where the highs and the lows of these 2 weekly candles were inside the highs and the lows of the previous one, which is this massive move down. Okay. Now, what I mean with this is that there was a lot of liquidity building on each side of the range, because people that long in here put their stop here, people that short in here put their stop there. And the more internal rotations you have, the more stop losses that will gather around those extreme points, and the more aggressive your moves will be. Okay? So initially I was watching for a long, and I actually posted this in Discord that I was watching for a sweep of the low, tapping into this 4-hour order block, if I remember. Yeah, this 4-hour order block, and get a move up from there. And what happened is that price finally swept these lows, taking the extreme point, and coming back inside the range. And what I said was, the first signs of strength would be to break the most local structure from the most recent rotation towards the low, which on the 15-minute would be a lower high for a lower low. Boom. And then lower highs, lower lows, lower highs, and lower lows. Okay? So this was your most important high to break, and as you can see, we did not break the high. We end up SFPing that high. Okay? End up SFPing that high. So I was thinking to myself, potentially price is not ready yet to have that rotation back up. Why? Because we left this 4-hour demand zone behind. So when I started to have this, when I started to notice this range formation that was going on in here, I was thinking to myself, we could have a local distribution in here, right? We could have a local distribution in here to come lower, just to tap that demand and create a bigger Wyckoff Model 1 accumulation, where you have your 1 tap, your 2 tap, and your 3 tap hitting demand, giving price no reason to come back down, and then have a very nice kind of more like a swing trade towards this high, because it will take probably a few days. Okay, so we were failing to take out the 15-minute market structure high, and we create a range in the process. And as you can see within this range is that we had our range high, we had our range low, and we had our first sweep of the range high, and then we had our second sweep of the range high. Where that second sweep of the range high, it actually had a reason to come back up again, because we still had these highs remaining. Okay, these highs above remaining, and also the way that we came down from the second tap, we also left a bit of a trail of buy-side liquidity right here. So, we tapped into extreme demand on the move down. And this is very typical for a Wyckoff accumulation, to tap the demand, and you should see it as the market maker. They're testing the demand to see how strong it is, right? To see if they're ready to surpass it, to see if their supply is stronger than the demand. So they oftentimes test the demand, just to test out how strong it is. And then if you get that break of structure confirmation, if you come back to the low, now there's no more demand to hold price up because it's already mitigated. So, we had those liquidity points, giving price a reason to actually create a Model 1. And we had our range high, first tap, second tap, third tap. Checking at the bottom of the range now, we actually also have a trail of liquidity. And not only do we have a trail of liquidity, this is also actually the Asia low of the of that day, right? So it's Thursday, and this is also actually the Asia low. And as I've said on my Twitter, what Forex loves to do is that the London session takes out either the Asia high or the Asia low and reverse to the other side. Okay. So what happened here is that we got that initial range deviation, got a move down, tested the demand, came back up, swept all that buy side liquidity, and then right here we got a market structure break. Okay, got a market structure break, retest into supply, checking the volume profile. We were also back inside the volume profile. So everything was lining up, We had no support below us. There's zero demand in this move up, and the only demand there was to protect the Asia low and these liquidity lows was this box, and that was already mitigated. So there was no support. We had a clean Wyckoff Model 1. We had a very clean break of structure, breaking back inside the volume profile, got the retest into supply. This is a setup that literally works. Like I back tested it. It literally works 92% of the time. Literally 92%. And oftentimes the 8% that it doesn't work is because, the Asia lows weren't lining up, or the third tab did not really have a proper reason to get taken out or to be created. So I honestly haven't seen it really fell when all these, situations are lining up. So when I see a trade like this, I don't even have to think. I just have to execute, right? So right here is where I shorted, put my stop above the high, target the low for a 2.86% gain. Oh, excuse me. A burp coming up. 2.86% gain, and then that's it. And I was even targeting a bit lower because, I was like, there could be a reason that price is not ready to go higher yet. Is because we still had the demand below us for the potential bigger Model 1. So the most ideal scenario was to take this to the Model 1 low and then, turn that into a swing long for the bigger Wyckoff Model 1 accumulation, targeting way, way, way higher. Okay. So that was my plan. But what happened is, if you look at what happened, you can clearly see price end up going higher, and we eventually just literally we went higher from there. So it failed, and I was really trying to figure out what could be the reason for this model to fail. And the only thing that I was thinking of today was that lately Asia has been making pretty significant moves. Asia has been making pretty significant moves. Just as if I exit replay mode, I don't know if it was Asia. Yeah, there you go. Look. Right here is where Asia opened at 2. So right here is where Asia opened. Look how we had this range right here. Okay, look how we had that range. We had all this liquidity, and Asia opened, took that liquidity, did not take the extreme point, but this was enough, broke structure, and had a very significant move down. So instead of Asia kind of creating a range and gathering a lot of liquidity, it's kind of showing its hand into actually moving price and sweeping liquidity. Asia is, instead of being liquidity, it's sweeping liquidity. So just because of that, maybe the Asia low isn't really a very good target at the moment anymore. And maybe we can say that instead of the London session taking out the Asia highs and lows, Asia actually has its own good moves, and then New York takes out the London highs and lows, because London is mostly consolidating if Asia has had significant moves. You know, that's just kind of the rule of thumb. If Asia moved like crazy, London will cool down. If Asia didn't move, London will move. So I was looking at it from that perspective, and that could be the case. Like, just looking previously, where was Asia? Yeah, also here. Look right here what Asia did. Asia opened right here, and it gave us the move up to take that high, break structure, and look at the move down that followed. So Asia has been, Asia has been moving. So maybe the Asia liquidity points aren't as strong anymore, because actually market makers did their thing during Asia, and the London market makers don't have to grab those highs and lows anymore. But that's low-key besides the point. It's always good to try and find an explanation to keep that in mind next time. But as I've said, if I take this trade with the data that I have now, if I take this trade over a long period of time, I will win 92 out of 100 times, because it was a very, very, very clean setup. So I was not bothered at all that I took a loss on this trade. Zero. Especially because prior to that, I actually also shorted that second tab. So I actually shorted this tab right here, targeting this demand for a nice little 1.23% gain at the moment, because my entry was a bit more better, and it put it above the internal high. There you go. So I didn't TP fully. I wanted, let a bit run to take out to the lows here, sweeping that Asia low. But since I saw that V-shaped recovery, I just de-risked myself. But yeah, I had that second tab range deviation short that I also posted in advance on Discord. Proof is on my Twitter. And had a nice little 1+% gain, and then I lost that 1+% on euro on the trade here. And I was actually more confident in this trade working than actually that trade working. So that's funny to notice. But yeah, really, really good to talk about this trade again, to also freshen up my mind. But even looking at it now, I literally know I would have taken this any day of the week again. If I see this again, I will still take it, because it's just such a high probability setup. It's a Model 1 where the third tab actually had a reason to come higher again, with a return to zone, breaking back inside the volume profile. Still have Asia lows intact during the London session. Like, what more do you want, right? So that was it for me on euro. Then had those two trades Thursday, and I didn't have a trade on Bitcoin. No. Then let's go over into Pepe, okay? Because I had a nice little trade today on Pepe, but it only hit my TP1. So, going over into Pepe, checking the higher time frames first, as we usually do. Just like Bitcoin, literally just like Bitcoin, Pepe is an amazing Wyckoff Model 1 accumulation schematic, and I do expect this high to be taken prior to this low to be taken. I can say that with actually a lot of confidence. Unless, Bitcoin just fucking rug pulls and takes Pepe with it, which I'm not expecting at all, but maybe that can change something if, I don't know, fucking COVID-14 pandemic breaks out. But no, very nice accumulation schematic. We're also, again, here, this grabbed all liquidity that you can call the fourth tab, but it's just a Wyckoff Model 1 with an extra big LPS. And as I said in the previous stream, if it was going to continue itself in a strong fashion, meaning we had this break right here, and with a strong fashion, I mean that we have a macro break right here, and prices also respects the internal uptrend. So having the macro break right here, looking at what the internal uptrend was like, is we had a move up, move down, move up, move down, move up, right? This is not 1 hour structure. So 1 to 2 hour structure goes like this, where this would be the ideal place to bounce for price to respect, the more primary and the more internal structure. Let's make this a demand zone. And then if we actually zoom in into what this demand zone looks like on the lower time frame, you can see that it was too little demand zones, meaning that this demand zone is already mitigated and this is the new demand zone. So if we grab it from here, we have unmitigated demand. Okay, that's how you zoom in on the lower time frames to redefine your POY. And what I was looking at is, price tapped into it perfectly, got a pretty significant move up, but instead of this model 1 working, we had that local distribution here that pushed price down. Okay, so I was thinking maybe prices need a bit more time to create a bigger range. Now, I was taking this as my range low, this is my range high, because if I zoom out on the 1 hour, you can kind of neglect what happened in here because it's very tight, but then this is actually pretty valid to pull on the 1 hour. And that's also how local small ranges and lower time frame ranges go over into bigger ranges. You kind of have a model 1 that hit its target or did not hit its target, but it did give a move up, and then that gave a bigger move down, and then this is your new range high, this is your new range low. Okay, so these lower time frame moves flow over into bigger ranges. Now, the same way I was watching for a model 1 in here, I was watching for a model 1 here as well, where this was your initial range high, this was your first sweep, and this is your second sweep. And I actually posted this in advance as well. Let me grab the picture for you guys. Let me grab the picture real quick. Here. Right here I have the picture that I posted this morning in Discord. And as I said Pepe is building a lot of liquidity below and above the range. Take either one with a confirmation, press it, and move to the other. Meaning, as I drew right here, I was expecting price to take out this low and then move towards the range high. Because we were building liquidity in here and we were building liquidity in here. So price was kind of tightening up. And then normally when price is tightening up like this, let me make the drawing a bit better. Normally when price is tightening up in a beautiful rounding up fashion like this and rounding down fashion like this, aggressive moves are to follow. So, we had that aggressive move down and then we have the aggressive move up, and then, we kind of cool off from there and see what price will do after. But this is very, very typical. Actually, a perfect scenario of this is when we shorted Fed that caused a 60% move, one of the best swing shorts ever for me personally. Let me just grab it so you guys know. I think it's gone now because Bybit deleted the pair, the derivatives pair. But here, there you go. This was the POC of this range. There you go. So, what we had right here is also we had a range that was, tightening up. It was curving up and it was curving down. So what can we expect? If it breaks out either to the upside first, we can expect that move to the downside to follow. So, this is just a perfect example to show you what it oftentimes looks like if it fully completes its schematic. Price is tightening up, had to move up, and then had to move down. Also, again, I posted this on my Twitter in advance, okay? Way in advance. Right around here, I was talking about price tightening up. So, yeah, very amazing trade. So, I was kind of expecting the same with Pepe, okay? And also because, this move down is not just a random move down. It could be the third tap of a Wyckoff Model 1 schematic. So while price took that low, of course, I'm waiting for local structure to confirm the Wyckoff Model 1 and my entry. So I was actually on the 1 minute time frame right here. And we had different highs to break. So, looking at our most important high to break, we have this high right here. Oh, let's make a trend line. It's this high right here. And that high is because, I just follow structure from the most recent rotation down that caused the third tap, which is a low, lower high, lower low. Okay. So this was your most important high to break. But then, waiting for that high is not going to give you an entry that's risk to reward worthy. So what we're going to do is we're going to dissect the market structure between this leg and this leg as a second step. Okay. Looking at the market structure between those legs, we have low, lower high, lower low, lower high, lower low, lower high, lower low. So this is our 5 minute high to break. And again, as I've previously said, it's like a domino effect. If you break this high, you can get a rotation back towards that high. But even then, the risk to reward is pretty shit if you wait for a break this high. So what we can do is even dissect the market structure even more between this leg and this leg. So if we go into 1 minute, that's where you'll find my entry confirmation, which is if you follow structure from the top down, let's just skip past those points, lower high, lower low. It's the most recent one. And then there is your market structure high. Okay. So that's how you kind of have that domino effect that played out beautifully here, where if you break this high, that kind of confirms that you can go up towards this high, and break that high, and it confirms we can come up to that high. Break that high, and we can go higher. Okay? Now, what happened? I also like to incorporate my volume profiles if I have such a low time frame break, just to see if where the volume area low is, because a break back inside the volume profile would just be an extra confirmation, because then you have multiple concepts aligning. You have the concept aligning of the Model 1 having a rotation back up towards the main extreme point, but you also have, the general concept of, reclaim the volume area low, POC is next, break past that, volume area high is next. So I kind of like incorporating it as well whenever I can. But if it wasn't lining up, that would not be a reason for me not to take the trade. But it is an extra confluence. And as you can see right here, breaking that high right here is also a break back inside the volume profile. So what I did is I literally just simply waited for the break on the 1 minute. I entered, put my stop below the low, and then I targeted the range high right here for a 2.8% gain, but because it was a high probability setup, I actually took it with a 2% risk. Okay? Took it with a 2% risk. Now, I saw whenever we broke that high, as you guys know, my entry is there and my stop loss is here. As we broke that high, price got a retrace with actually a reconfirmation. So we got that retrace, and then right here we had that reconfirmation, meaning that this was going to be a higher low for a higher high following this pull, a higher low for a higher high. And I saw it, and even though we got the reconfirmation, I didn't want to risk moving my stop loss towards that low, because I knew that later on, price can just come back, take that low to create a bigger LPS and move higher. Where, you have the 1 tap, 2 tap, 3 tap, and this is the bigger LPS. Literally the exact same way that Pepe has been doing it on the macro time frame, right? If we zoom out again, just like you have a Model 1 in here, where price can come back for this low and tap it and sweep it, the same way it can happen on the lower time frame. And it exactly happened in the exact same way on the lower time frame. So the clear invalidation for me was just this low. So that's also where I kept my stop loss. And price grinded up from there, sweeping all this sell side liquidity that we had on that move down. And there was actually some news at 2:30 p.m. This Friday, the 28th of June. I don't exactly know what news event it was. Let me double check. Oh, wrong everything. Okay. I don't know. I don't have it open. I had to restart everything. So there was some news. I think it was consumer confidence. I'm not sure. But because there was news and I was with a 2% risk on my setup with my stop loss below this low, I decided to take a 25% TP here. Okay. So it took a 25% TP here, causing me to, be way more de-risk. Because not only am I losing less money because only 75% of my position is remaining, I also have a 25 take profit. So I make money and I lose less if my stop loss gets hit. And I was checking how we came up, and just like the way we came down here, leaving lots of sell side liquidity, right here you can draw almost one of the most easiest trend lines ever regarding liquidity. So we could say that, yes, we did leave a lot of liquidity behind on the move up. So, we did break this 10-minute high, technically speaking. So we can call that a break of structure. I think it's also on the 15-minute also break, technically speaking. 35 and 45 is not valid anymore. Yeah. Oh, on the 1 hour, there was an SFP, actually. Yeah, so it wasn't 1 hour SFP, so it was a bit sketchy. I actually took that into consideration when I was taking the take profit at the top. But yeah, I knew this was going to be a liquidity point. So I took a 25% TP at the top. We got a pretty significant move down from there, still keeping my stop loss below this low. And then when I saw the move down and the move up to follow, I was like, yeah, if this is going to be a proper Wyckoff schematic, this is the LPS, because it's showing me signs of it being an LPS because it hit and grabbed all that last liquidity. So whenever we got the move up from here, I actually moved my stop loss to that low, risking nothing anymore. Like my entry was right there, and my stop loss is here now, and I already took a TP there. So I was like a 0.1 to 2, like a 0.1.2% profit if my stop loss gets hit. So kind of break even trade, you could say. And yeah, it was for me either a do or die, right? Either my stop loss gets hit for a tiny profit, or we hit that range. We hit that range high, and from there, unfortunately, Bitcoin wasn't in our favor as well, and price decided to dump down a bit more. So you can call it a break even trade. Technically speaking, it was 0.2% in profit. But yeah, really nice trade. Not particularly the result, but just, we saw the entry model, we executed, we saw the dump, we were prepared for it. We got the move up. That's when we could throw our stop loss, and then we got stopped out for a tiny profit. So executed according to plan. So when you execute something according to plan, doesn't matter what the result is, it was a successful trade. Okay, that's how you need to program your mindset. So those are actually kind of the trades that I wanted to talk about with you guys. Especially the euro trades, something I really wanted to discuss. And it just also shows that I'm very consistently profitable. Also regarding my win rate, I have a pretty high win rate. But these trades, they just happen. We just have to live with it. Okay. Gold, I haven't taken any significant gold trades. But what I do want to show is that, again, here on gold as well, look at this Asia involvement, right? Right here we have a range. We have a range high for a sweep of the range high. And look at this. Asia opens, take this high, break structure, confirming the model 2, and look at the move to follow. So there is something to be aware of that, Asia has been giving us crazy moves lately. And maybe, New York is the new London high and low searcher instead of London being the Asia high and low searcher. So that's something to keep in mind for you guys if you're trading Forex or any traditional market pair at the moment. And hope I could have cleared your mind a bit with Bitcoin, that this could potentially be a macro bottom right here at 59 or 60K. Let's just call it 60K. Also a nice, very nice psychological number now that I think about it. Very nice psychological number, but a macro bottom at 60K. So yeah, I'm happy to be back. We'll be recording another backtesting video this weekend. So if you have a preferred pair between gold and Pepe, let me know. If there are many favors into one, I will do that one for you guys. And I love you guys. Hope you had an amazing trading week, and peace out.